Let's try and understand what really is the order visibility going forward. Amit Uplenchwar, the Director Strategy Business Group at Kalpataru Projects, joins us on the show right now. Amit, hi, morning. Good to have you on the show. Help us understand what is the order, pace looking like right now. What is your order book currently, and what is the visibility that you have, say, for the full financial year?
Hi, good to be here. Good morning to everyone. So order book, for the first quarter was a little slow and naturally so because elections were there and there were a lot of code of conducts going on in various states, etc., etc. However, that activity seems to be picking up in August. So far as we are concerned, we are quite lucky that we are sitting at, 63,000 crores of order books, including L1. And so the market looks buoyant for us. Our interactions with various state and central governments depict that there is enough order pipeline there. You would have seen the finance minister talk about 11 lakh crores again this year for capex spending. So I think to answer your question, the visibility looks very good across all segments that we operate in, both in India and overseas.
Amit, I want to talk to you about a slightly broader point. Just looking at your numbers, between 22 and 24, your order book, your revenue actually has gone from almost 15,000 crore to 20,000 crore. That's a sharp 25% plus kind of a improvement. Are you confident now that you are from these levels also 25-30% kind of revenue growth visibility, the way orders are flowing in and you are L1 to a large sized order? Do you have that visibility?
So I think 20% visibility is there, looking at the orders that we have in hand. You also have to look at our order book profile, right? Over the last 2 years, as we've merged, and the quality of our order book has transformed from being, to a larger EPC kind of project mix, which gives, engineering in the first phase. So your order revenue tends to come towards the 75% later part of the project. And that mix gives us confidence that, yes, 20% for the next year and the year after looks like a good target to keep, in spite of a phenomenal growth over the last 5 years, as you mentioned.
So is that mix actually going towards higher value chain, also giving you better margin profile as well, and you can go back to the historical levels of 12% or thereabout?
So, definitely this gives us an opportunity to do, engineering optimization, etc. Hence, bumping up our profile of our margin book. We've mentioned this year that we will go between 4.5% to 5% at a PBT level. And hopefully we can continue that and only grow in the next year as our, these newer kind of orders are at better margins and give us the ability to do engineering optimization on these projects.
Right. So, if you could just help us with the range, what kind of EBITDA margins are you targeting going forward? And is there scope then to go back to the historical levels of, 12% from the current 9% that you're clocking?
So if you see our historic 12%, you're talking about an era where, there was only KPTL. And KPTL was in kind of businesses, whether it was T&D or it was railways or oil and gas, was typically a low capex business. However, now with this merger of erstwhile JMC and KPIL, we have projects that need, for example, urban infra, which requires large tunneling machines called TBMs, and other building projects which require capex. So when you look at us now, I think it would be a more appropriate to compare us at a PBT level, because the capex mix is very different now. Although I think you should expect 9% upwards of EBITDA margin also at a joint or a merged entity basis.
Amit, what is the progress as far as the potential sale or divestment of Vindhyachal Expressway is concerned? What stage is it in yet? Can you share some details?
See, we had mentioned that we are speaking to a few people, and now we are in advanced stages. I had guided, at the end of Q1 that we should be looking at definitive agreements, hopefully getting signed at the end of Q2 or beginning of Q3. And we are working very hard, towards that target, to hopefully achieve that as we've guided.
So that's progress, I would say. So, can you share with us what will be the proceeds of this transaction be utilized into, and any ballpark valuation where you are comfortable striking the deal at, or too early?
So, we are still, as it's still in final stages. The construct of the deal is in its final stages. And as and when we do conclude that, we will come out to the market, in line with disclosure norms. But at this moment, it will be difficult for me to, tell you what kind of, valuation or what kind of levels are we looking at. But it's not that far. So hopefully, if we can conclude by the end of Q2, beginning of Q3, we'll be able to tell you what those numbers are far more clearly.
And could you also give us a color then, Amit, on what's happening with the international market? How are demand for orders actually looking in there?
So the international market for us is also, if you looked at our disclosure and the Q1 presentation that we gave for investors, Europe, where we are a large player in the transmission space in Sweden and the neighboring countries, is seeing a huge resurgence in terms of T&D market. Brazil, our subsidiary, is having a very large opportunity set in front of us, where we are poised to capture that growth momentum. Building and factories, we are building airports overseas, and that market looks good as many new airports are getting announced around the world. Our oil and gas, with our significant entry in Saudi Aramco and many more projects coming in the pipeline, looks like a very interesting opportunity as well. So, overall, I think several of our segments have a lot of blue space when it comes to projects, a lot of opportunities already announced, and hopefully we get a piece of that pie going forward.
Okay, Amit, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.